I'm just going to pull these over and I will walk through here. As I mentioned a couple times, the options market is a wonderful way to kind of trade the market based on two assumptions. One, that the market is going to be in a trend, or two, that the market's going to be in a correction. That's why one of the many reasons I love the wave principle so much is because it gives you that context. And for option traders, there's two different styles of trading you want to look at if you are in a trending environment or a corrective environment. If you're just an underlying trader trading futures, Forex, stocks, or futures, your job is to be either in on trends or out completely. Options give you the ability to be in on either situation and make money. So the first one, Dana, I'd like to bring up here is symbol CRON, one of the marijuana stocks, which happens to be breaking out quite a bit here. And what I'll show you here is in the blue wave counts, wave 1 and wave 2 at the end of 2018. I believe that we're breaking very nicely higher in blue 3. As you know, a wave 3 is usually longer than wave 1. The minimum upside objective with that guideline is equality, or 100% of percent distance traveled in 1 compared to 3. That was that blue fib right there, Dana, at 14.68. We've eclipsed that. And right now we're trading at about $18.44 since I captured this. Color-coded in green is your typical wave 3 fib relationship at 24.55. Okay, so what does that mean? Well, CRON is already on the breakout. It's already moving up. And if the wave principle is going to hold, and we're in fact in a good third wave, you should be able to move up to that green 161% projection at 24.55. And you can see I'm kind of backing into the option trade here. Now further, as you know, wave 3 is emotive impulsive, which means it breaks down into 5 smaller waves. So I'm going to bring over the next chart that has this blue 3 subdivided, and you'll be able to see the proposed 5-wave subdivisions. So with that 1.618 multiple in the back of our mind, which is right there, here's blue 3 further subdivided. 1, 2, I'm projecting a wave 3, pull back in green 4, move up in green 5. Same kind of situation. Blue 3 equality 100% is 20.87. I think we should be able to reach at least that with a higher degree wave 3 in mind than a prior chart I spoke about. You know, you have implications up to about the 25 mark, and it's pretty safe to say we should be able to move through that. So a good quality directional trade I like to do is buy the at-the-money call, but then to reduce the capital outlay, pair that up with a sale of a call at your fib and wave objective, which I think is very conservative, just at that green 161%, which is 24.55. So a great way to trend trade within the context of wave 3 is buying the 20 call, selling the 25 call. In March, you can do that for $1, $1.50, and potentially make $3 or $3.50 or even $4. So a very nice reward to risk ratio. So I think for directional trading, it can be wonderful. The other aspect is within ranges. And I think the market will range trade a lot more than it will trade on a directional basis. If you remember, if you've been watching Disney was one of the most boring stocks for a long period of time. This chart was in 2016, 17, and 18. And traditionally, if you're trying to trade this on the breakout or breakdown in a 4th wave triangle, incredibly frustrating. So another option strategy you can use, Dana, is something called a butterfly. A butterfly is a strategy where you're basically short 2 options in the middle and long 2 options above and below. That's your protection. See, Dana, options have a decaying component to it. Options are a short-term instrument that allows you to control the underlying. If you're paying for that option, you have a fixed amount of time to be right. Sometimes it's better to be on the other side of that, write that insurance premium, collect those premiums, act as the landlord rather than the tenant paying for the trade. So what you do is you just, if you're in a triangle and you have a feeling that you're in the triangle, you can do a strategy like this, collect the premium on the 105 calls. You're protected above, you're protected below. And the last thing that I'll say with this, Dana, is if you think you're in a 4th wave, which as you know is preceded by a 3rd wave, the initial ABC decline probably suggests you might be in a flat or a triangle, because seldom are fourth waves zigzags, just like this. So do you always know you're in a triangle? No. But the wave principle gives you a suggestion that it might be prudent to put on one of these strategies. I understand it's a little difficult to understand the specifics of this trade right now as we're speaking. This is a trade that Jeff Kennedy and I have been working on in our Trading Analysis Meets Traders classroom. It's a little bit more advanced, but it's not out of the realm of understanding with just a little bit of study, but it's a great way to take advantage of the decaying nature of options.